the ones that don't know me, I'm Martin. I'm a Real Estate Business Development Director at the BONARD, and today is my great pleasure to present a little bit of a student housing market focusing on Europe with some benchmarks with Canadian and some other worldwide jurisdictions. I see many familiar faces in the audience, but before maybe going to the proper presentation of the market, just a couple words about the BONARD for the ones that don't know us yet and for the ones that are also online. The BONARD is market research and specialized firm narrowed mainly for the rental residential asset classes. So we're in a living space. Our main remit is student housing indeed, but over the years we expanded to other living spaces like co-living, like senior living, service apartments, and as well the BTR schemes. So we have 4 offices. We are headquartered in Vienna, have office also in China, one other in Brazil. Team of more than 50 specialists focusing narrowly on these living sectors, underwriting the market assessments, the opportunity assessments and portfolio within these asset classes. So far we delivered more than 500 projects within the underwritings, and we're active in more than 240 markets and sub-markets, which all the exposure you can see on the map here. So basically, as you can see, the biggest exposure is still coming from the Europe, when we are covering about 160 jurisdictions. It's not only Tier 1, but also Tier 2 and Tier 3 cities for the student housing and other living sectors, for which we have granular understanding of not only the market from the helicopter view, but also the asset level details. Over the years, we expanded to other jurisdictions globally, which one of it is Canada, Latin America, Australia, and a couple in China and Asia as well. For today's presentation, we prepared basically the standard indicators to show how are the trends and how the basically situation is evolving in student housing market over the years, mainly comparing with the previous year in terms of what is the demand, how it grow. As well, we're going to touch base on the supply side, so how the provision rate is actually now comparing in different jurisdictions, rent level changes, occupancies, and as well the portfolios that are currently active within the European PBSA markets. So let me firstly start with the demand. The first layer, as you can see on the map, is showing basically the biggest population of the demand distributed by the selected jurisdictions across the globe. As you can see, in terms of international students, which is the right side of the graph, the UK is still the biggest market and is having more than almost 500,000 of students coming to the UK looking for the education and as well for the accommodation as a follow-up. In terms of the domestic mobility, when we take a look at the domestic students, Germany is the first one. So basically Germany is mainly driven by the domestic students, and it's more than 1.6 million students that are currently living and studying in Germany. Big part of it is indeed basically domestic mobility and domestic mobile students, which also present one of the part of the students that are looking for the accommodation within the area of the Germany. As you can also see, the UK is also high in terms of the domestic mobility and domestic students as well. So indeed, the biggest market in terms of the students, as well like a saturation, which we'll present later on, is still the UK market. But comparing to the other world jurisdiction, I have to also say that the world benchmark, we can see also Canada has a good traction in terms of both international and domestic students. I personally visited Canada 2 weeks ago, and I have to say that there is a lot of migration happening in this market, and the student housing market is becoming really more global in terms of the product offering, in terms of the institutional product, and in terms of the demand mobility. Looking at year-over-year changes in the students, here is more city focused, but on the very first side you can already see the green and red dots on the map. The green represents indeed the growth of the students, so the territories that the number of the students has been increasing comparing to the last year, while the red dots represents the decrease of the students. Majority of the bigger increases, like the bigger double digits, like you can see more than 20% are coming from the UK, so the still UK is providing a very good fundamentals, even the provision is higher comparing to the other markets. But also when you take a look at other European jurisdictions, like there are a lot of German cities that are achieving the higher single-digit growth of the students comparing to the city. The ones that have been decreasing, the maximum decrease we've seen was at a level of 4%, and the rest of them was at a level of on average 2% over the years. But in majority of the countries and majority of the cities that we mapped and we took a look at, the demand and the enrollment of the student has been increasing year-on-year basis. So we see that the trend that mobility and basically the pickup after the pandemic situation, because today is not only how we stand today, but also how we evolved over the years during the pandemic. We've seen that it was a little bit stopped when it comes to traveling during the pandemic. Even the occupancy remained quite high, which I will touch base later on. But now we see that the pickup from the market is really high, and the enrollment of students and the higher double-digit enrollments we can see in the cities is just proving that the demand is there and is growing in the majority of the cities. And how the market reacts. So what is the supply? On this map you can see the provision rate across the European jurisdictions. So what is basically the beds to students ratio? How many of the students can get the access to the beds? UK remains one of the most saturated markets comparing to the rest of the Europe. So 31% provision rate, so basically every third student can get the access to the accommodation. While continental Europe is still a little bit lagging behind, there are some differences on a country-to-country basis. But on the average, the continental Europe provision rate is at a level at about 17%. So it's almost half amount of the UK market. Even though we have a big potential from the demand, as I showed you previously, there is a big chunk of the students studying in Germany, coming to other jurisdictions like Netherlands, etc. So both domestic and international are growing. The supply is not really catching up. And I will also show you later on with the pipeline data that there is still place to grow. In the BONARD, we established a 25% benchmark when we measure the provision rate on the market, which doesn't necessarily mean that the market is saturated. It just provides a little bit of a signal that there is much more competition on the market, and it needs to be more focused about the product deployment, about the location, and about the rents, because there is much higher competition on the market. Hence, you need to be more careful about the new product that will be deploying on the market, because you want to compete and you want to be competitive on the market with the other providers within the market. But even the 25% benchmark that we established to be somehow the yellow flag, let's say, it's still far away for many of the countries to achieve this benchmark. When you take a look, for instance, in the CE, like Poland is having 8% provision, and Italy, not even 5%. So there is much more place to grow and much more place to provide additional accommodation for the market and the students. Before the academic year, our team conducted a research when they interview the providers, when they check the prices, and they do the multiple approaches to get the understanding of how the rent levels have been changing comparing to the last year. And here you can see the two layers. The one on the left is basically showing you the details over the countries, how the rent levels has been increasing comparing to the last year before this academic year. And on the right side, you have the details per city. As you can probably see on the map as well, going from the west to the east, there are much higher increases on the right side. And the Eastern and CE Europe has been providing much bigger increases. I don't know what happened now. Stefan, could you please help us to get it larger? But in general, what happened is, going from the left to the right, is that in Central Europe, we noticed that the increases were mainly to two reasons. The first one is the provision rates I presented you before. There is much less competition in the Eastern and CE countries. So given that condition, you're in a much better environment to increase your rents, because the provision are much less and much lower. So there is not so many competition to be dealing with. While on Western Europe, the rents have been increasing in a pace of 3 to 4% in many places, but it's due to reason that provision is higher, so there is much bigger competition in the cities. So there is not such a big place to increase the rent. So you have to be careful because there are many providers. And the second one is that, oh yeah, you can also see on the screen up there. And the second one is that a lot of the Western European providers have hedged their contracts. So they secure their costs for the next period of the time. So they were not really necessarily pushed to increase the rents so rapidly like the Eastern or CE countries in terms of the growth due to economic situation, inflation, construction costs, etc. And how it all basically reacted in terms of the occupancy rate. So we've seen that demand is growing. There is probably bigger growth from demand than there is a pipeline. The rent levels are growing, somewhere more faster than in the other countries. But when we took a look at the occupancy before the academic year and compared to last year, we can already note that we did not see any drop of the occupancies comparing to the last year. On the other side, the occupancies in student housing remained quite high. It remained on a top level, basically. So as you can see also on the slides, it was almost 99% in the many cases. And we do a lot of site visits. So my colleague's going to go to Berlin tomorrow. I was also in Frankfurt and London visiting the assets, and we tried to get some site visit of the rooms, and there was nothing to show us because everything was fully occupied. I was in Canada 2 weeks ago. There was the same scenario. There was nothing to show us because everything was fully occupied. So we see that the occupancy-wise, the market is performing very well, and the provider of establishments are actually creating a waiting list already, even though the rent levels have been growing, even though the demand, of course, is growing so rapidly that the gap of the beds is still there, not catching up the current demand. So that's why occupancies are still high. For instance, the Germany is at a level of 98%, so it's super high comparing to last year. France is, I think, 99%. Yeah. During the COVID, the occupancy's average was at a level of 80 to 85%. So it was still proving to be anti-cyclical, to be defensive asset class. And even though the mobility was stopped, there was still income coming from this property. It was different for the physical occupancies in many reasons, but the rental occupancies remained high during the COVID as well. Now we see the pickup of the market after the COVID. The mobility has resumed and the occupancies are hitting the roof. So how does it reflect in the years going forward? Because we see that demand is growing in majority of the cities. The premises are fully occupied, so students are willing and need to find some other options of the accommodation. And here is the data for the pipeline. So what is the number of the beds and establishments coming to the market in next year? Currently, the biggest pipeline we noticed together with what is in planning and already under construction is in Paris, followed by London. Paris is quite equally split. So there is proportionally 9,000 in planning and proportionally also 9,000 already under construction. So in terms of the under construction assets, the Paris is booming, is the biggest market. In terms of the in planning assets, so how many markets will be coming in the market but still didn't hit the ground, are mainly in London, so more than 10,000 assets coming to London. So we see that London is still getting a lot of traction. Even though provision rate are more than 30%, the people are still deploying additional developments in London. But we also see that many of the countries that haven't been such popular for developments previously are now on the radar as well. For instance, we see more developments in Milan, we see more developments in Warsaw. So basically the countries I mentioned before that are having the less provision rates, lower provision rates and less saturated markets are now getting some traction, and people are more intensively willing to enter the market for those new opportunities that are standing there. And maybe just to wrap it up, because this was all basically the market data, providing the understanding for where the market stands in terms of demand, supply, rents, occupancies and pipeline. But our team has been intensively working on the full PBSA portfolio database over the last even years. And what we did, we managed to collect details for 200 86 portfolios that are operational in UK and continental Europe, with a with a detailed overview and understanding of all the operational assets, so the territorial footprint, together with the pipeline, and as well the ownership structure with some plans to expand further for the next portfolios. So here on the map, as you can see, 10,000 plus bets portfolios are mainly coming from UK. Maybe to mention also the portfolio that we mapped are based on operational brand. So you can see that it's ranked by the operational platforms that are currently on the market. The first one is Unite in the UK. And if I just click on 10,000 plus bets, you can still see that the majority of portfolios are still coming from the UK. So it's basically in line with perception of the market that it is the most saturated market. It is the market that has been there for a while. It's been developing for a while. So the biggest brands and the biggest sizes of the portfolios are still in the UK. While the sizes from 5 to 10,000, we can see more of those already in continental Europe. So market is slowly developing and it's getting there, but still the biggest brands and the biggest portfolios are located mainly in the UK. So for instance, if you just go to Unite, you can see that they're only UK. They're not even in a continental Europe itself. So the market itself is still kind of a more saturated in Europe. There are a lot of opportunities in continental Europe, of course, more saturated in the UK. But maybe to conclude and to wrap it up, that these are the market data that are showing us. But we all know that there are some headwinds in terms of the construction costs, in terms of inflation and interest rates quite recently. So there is something that everyone needs to deal from market to market basis. It had some, of course, implication to the new developments, the new build products, but there are some tailwinds as well, as I presented here on this presentation, that in terms of the demand, we see the enrollment is growing, so the potential tenant is there and will be there, and there will be more of them. The rents have been rising through all the European jurisdictions, and occupancies, even though the rents have been rising quite rapidly in some jurisdictions, occupancies are remaining high. So indeed, some headwinds, but tailwinds as well for the sector. And we all see how the market will develop across the jurisdiction of the continental Europe in coming years. Thank you all for the attention. Hope it was useful and provided some insights and a quick taste of European student housing markets. Feel free to reach out for us or to the data BONARD for the slides. We are happy to distribute afterwards, and I'm happy to talk to any one of you. We're just having a side on the table on the side, so feel free to reach out to me, and I'm happy to discuss in more details. So thank you, and back to you, Richard.
Perfect. Thanks very much, Martin. Very good. Without anybody noticing, because to save us moving that for time, I'm just going to move these here so that you will all be able to see the speakers, which is going to be key. So really interesting topics there, I think, that we can pick up in the panel. Let's introduce our panelists now. Come and take a seat. Let's start with you, Sofie. Come on down. Great. Thank you, Florian. Perfect. And it's interactive, so if you've got any questions, the joy of us all being able to be here again together without wearing a mask is that we can ask questions. So if you've got any questions, do think of those during the time and somehow let me know that you've got a question to ask, or just stand up and ask it, and we'll be happy to answer those. Let's start with introductions, maybe starting with you, Sofie, at that end, and then we'll just move down the panel. So quick introductions of yourself and the company.
Thank you very much, Richard. Thank you for this opportunity. My name is Sofie Raaschou. I work with the NREP as part of our living business line. We are a Nordic investor and developer. We are around 600 people and manage some 18 billion AUM. We are heavily a product and user-centric developer, and one of our key focus areas is student housing. Our brand is called Umios, and we have a couple of sites live now in Copenhagen. So my focus today will be the Danish market, and particularly Copenhagen.
Great, Julia.
Hi, I'm Julia Momotiuk. I am the Rent Residential Director for BONARD. You've seen my colleague just present now. So we are a research and advisory company. Like Martin said, we have teams and people in Europe. I think it's our strongest presence. And then in Asia and Latin America. We are originally from student housing. Then we expanded to other rent residential sectors, now looking into, of course, co-living, micro-living, what we'll talk today, and senior living as well. I've been for some time with the company, leading the team of researchers into this rent residential sectors.
Super, thanks. Florian.
Hi, Florian Obermaier is my name. I work for Commerz. We are asset and fund manager focusing on real estate and also on renewable energy funds. We are invested in micro-living with 2 products. I'm responsible for all the institutional client products. We mainly invested in Germany, but we also have a Europe fund for micro-living.
Great. Rainer.
Good morning from my end as well. My name is Rainer Nonnengässer. I'm representing International Campus Group. We are a developer, investor and operator of student accommodation and young professional living. We cover Germany, Austria, the Netherlands, and we also have a beautiful scheme in Prague in operations. And currently our universe is some 8,000 units in operations and in delivery.
Perfect. Florian, let's start with you. A lot of discussion, a year ago in the middle of the pandemic about how resilient student housing was, what was going to happen, would students go back, will there be just online courses going forward? A year on, how do we see that? Where do you see us in the market at the moment?
To be honest, we're quite happy with our assets. On the asset level, we haven't felt that big impact due to we aren't invested in the luxury segment, so we have like the regular micro-living apartments, and a lot of students, during the pandemic, they kept the apartments, so our occupancy rates were pretty high. For us, the biggest challenge is obviously like the equity side. Investors are still they try to find themselves in a real estate strategy. For us, we focus on what we have, and our biggest challenge is also the development risks in the pipeline we have, because we also invested in like forward fundings and stuff like that.
Okay, good. And Sofie, just picking up from you, obviously you're active there, particularly in the Nordic markets. So what's your perception of it there? Was there change? Are you seeing change now? What's the situation in your market?
So I think in Denmark the structural tailwinds are still very much there. We see the hugely undersupplied market. It's also one where the planning laws have not been in favor of either micro-living or student housing, which means that we have leftover 50s buildings with dorm rooms, and we are lacking really a modern product still. We still have a situation where every time universities start, the students are scrambling to find a place to live. We hear these horror stories of them living in, tents on the field, and, scammers trying to grab their deposits, and they just have a really hard time finding a place to rent still. So there is still a huge undersupply, and we've also seen quite, increasing rents, much more outpacing the, private rental sector. So I think there is still a big opportunity there.
Okay, good. And Julia, just coming to you, in terms of Sofie mentioned the rents there. What are you seeing? You're obviously doing data, some interesting data in that, but what are you seeing in terms of the rental side, for Q2 coming forward? What's your take there?
Yeah, rents are growing quite considerably and quite quickly. We looked across the European markets, Canada, and the trends are quite the same. Occupancies are back to pre-pandemic levels, and the operators are quite confident now to go to over 10% increases, reconsidering the rents monthly. Luckily, in the rent residential, we have this opportunity to set rents quite dynamically, so it's quite beneficial for the players on the market.
Okay, good. And are you seeing differences across the market there? I mean, so how do you see that? I mean, it was interesting to see the difference there between occupancy rates, for example, in Paris versus others. Is that reflected by the rents? What's happening is, where you've got a tighter market, are the rents of necessity always going up?
Yeah, for sure. In more competitive markets, of course, there is not such a wiggle room, to increase that rent too sharply. And CE, the increase was much more considerable. There is such a lack of product there as well, and there is no place to live, so increase is quite bigger.
Okay, good. I have to confess a personal interest in this area at the moment, because I've just been taking my daughter round to universities and looking at accommodation, so I've got quite a good view on the UK market for certain. But Rainer, certainly I was seeing international students very much coming back this term in the ones that I've seen last week. So are you seeing that across Europe? And I suppose, because that's one of the big differences over this time last year, is domestic students, certainly in some of your markets, were coming back, but are you seeing international students also coming back?
Yeah, in principle, you don't have any international travel restrictions anymore. So the Asians are back. And one comment to what Sofie just said, the tents are back. So you see them in the Netherlands, you see them in the southern part of Germany. And what is that caused by? If you look at the occupancy figures that just have been displayed, I think they are some September figures. And especially in Germany, we usually have a situation that beginning of November, mid-November, you are technically full. This year we are already full in September, which means there will be a number of young people who are now starting to look for accommodation, and I keep fingers crossed for your daughter there, who will not succeed in the first instance in what they have been looking for. And this is a trend that we see all over Europe. Each and every country has a different process as regards timing, as regards enrollment and acceptance letter distribution. Germany typically is a little bit late, the Netherlands is pretty early. But it's reflected in the occupancy figures that there is a massive traffic coming from the international side, which has filled up all the beds all over continental Europe so far.
Okay, good. And I suppose, how do you see that sort of occupancy versus rental income? Is there a limit to how much rents can go up? What's your sense of that, Florian?
That's a very good question. I had a discussion this morning about what's the potential exactly. So to be honest, we don't know yet. We always increase rents with the fluctuation. But a big topic is like, what can you put on, like, for gas costs, energy costs and stuff like that. We were facing an inflation that's not in the calculation, to be honest, in this dimension. So right now we try to find a way to find a fair price for students and young professionals, what they can afford, but it's not easy, to be honest. So that's, I think, a question everybody is questioning themselves right now.
And Sofie, does things like the energy crisis, obviously, we've got potential recession across Europe, for example. How much is that, I suppose, because sometimes it's counter-cyclical and that drives more people into higher education, but at the same time there may be an affordable issue with some types of accommodation. So is there a spread of affordability in your market?
Yes, there certainly is. We see the high end of the market that's appealing to especially international students. That's very amenity rich. That's very operationally heavy, and then we have the more mid-market product where we are, which we've tried to tailor to make it as affordable as possible. Looking at what's the actual offering to the tenants, what is it that they really appreciate, which in our view is community and as low rent as possible. And we are also targeting much more domestic students, which has a couple of advantages. One is that they get a student grant from the government, so they get around 850 euro, which basically covers the rent in all our properties. So you can say, no matter how bad the downturn, basically the government subsidizes the entire rent for domestic students. It's also meant during the pandemic that we were not as exposed as others. We also don't capture the high, end of the rental market, but I think in this day and age, we're quite happy with having a product like that.
Okay, good. And obviously one of the areas that we're discussing in a lot of these is A, what's happening with interest rates, but also what's happening in global capital flows, and we'll be picking up that later on in one of the sessions. But I suppose, Julia, what are you seeing in terms of the investor intentions, in terms of sentiment in the market? Is there anything coming through in your research that sort of shows us what investors are thinking at the moment?
Yeah, I think this year was quite turbulent for everyone. We are living in crazy times. So coming from pandemic, where we had to deal with staffed flow of students, now into rising costs. So we've seen more activity, more deals at the beginning of the year. Now we hear that investors are a bit more cautious, continue to do deals, to proceed with due diligences. Maybe it's taking longer. It's looking for that right opportunity with that right return that is set up. As we see, the prices actually for opportunities didn't go down that much, and maybe there will be some repricing in time, but for now the expectations are there and that capital needs to be deployed. So we hope for continued investment activity in the sector.
And what's the situation? I mean, there's a lot of discussion around whether or not there's going to be all equity for the moment because leverage is not as useful as it was in the market previously. What's your sense of that for those using leverage? Will you continue to use leverage? Are there issues with financing? Cost of financing obviously gone up. Construction costs have leveled off, but still at a relatively high level in comparison to others. So what's your sense? Is that limiting the amount of development of new product that you can do? Will you choose a more all equity route? Is it a challenge? What's happening there? Do you want to start on that, Rainer?
Yeah, I think if you look into the German market, there are various effects. The underlying fundamentals of the sector are still extremely positive because of the massive supply-demand imbalance, plus the fact that the asset class has proven high resilience in critical times, seeing COVID and seeing the situation now. As regards developments, and I think you have the same situation, looking for new transactions, it is a series of events from my point of view. The pulling the plug on KfW programs in January already has led to a collapse of a lot of projects or developments in Germany. Then seeing interest rates rising in a very, very short time period to now 4% something, has made a complete shutdown of activities. Plus the fact that there are still uncertainties on construction costs, there are disruptions in delivery chains. So I don't see a lot of developments currently in the market. There are some that are spillovers from 21 who are heading towards completion, who are financed. They will be potentially available when they come closer to completion to mitigate cost deviation risks. But true new developments are not foreseeable, which will have an effect for the next 2 to 3 years, where you still have a rising demand from the student side, and the offer will remain flat in most of these markets, which will trigger additional rental increases. Looking into the rental situation, I think for most of the operators, the challenge currently is how to manage your gap between GRI and NOI, where you have inflationary effects pushing up OPEX, where you have utility costs, and where you definitely need to manage a situation that your NOI is not completely diluted by these cost effects. And therefore, my impression is we will not see a lot of transactions this year, because everybody who was thinking about selling something earlier this year, and I've seen a lot who have withdrawn for these reasons because they feel they might be underpriced. And on the buyer side, it's pretty much the same. Yeah, there's a tendency or a fear of paying too high prices. So I think this vacuum will remain until the end of the year, and maybe depending on how cold and dark the winter might finally be, there might be a different mood kicking in earlier next year.
Yeah, there's been a lot, twice in sessions that we had yesterday, people talked about the sort of market coming back for MIPIM. I don't know if they were all from Reed exhibitions, maybe they were, but let's pick up just on some of those. I mean, you mentioned there the energy side. How much of an impact is that potentially having? Because obviously, you know, the operators are often paying for the energy, and if energy prices are going up, how, you know, can that be connected to rental? How much of an issue is that for anybody?
Well, I think and hope that it will accelerate, you know, the journey towards net zero. So for us, it really taps quite well into our mission of becoming CO2 neutral by 2028, both on embodied and operational carbon. So we are already very proactive on that. And I think, you know, now the financial incentive for getting, you know, close to net zero is even more there. And I think especially for student housing, giving the small unit sizes is a, you know, a very strong story towards politicians as well, because this is basically the most sustainable way to live, is to live close together and share buildings and share energy and so on. So I think the tailwinds are definitely there, but I also very much agree with Rainer that this is the perfect storm when it comes to development. And it's just a shame that we will see lower activity for a while. That's in the entire residential sector. And I think all of us also have a job probably going back to the drawing board and see how can we make our product even more affordable and even more sustainable so that we can still put new products to the market in this day and age.
And that sustainability topic is a big one here at the fair in general. Florian, just give your take on that if you could.
I just totally agree with Rainer and you. I'd just like to add, the most discussions with investors we have, they try to avoid the development risk, not the micro-living segment right now. So, for example, we are very much invested in forward fundings, and at the moment they wait until completion and then thinking about investing in the product again. For us, the deals are becoming more and more individual, so the forward funding model of the last few years has to invent himself completely new. We as a fund manager, we have to find a way to enter projects in a more early stage, try to think taking more risks as well. For example, Commerz we are committed in the project also by their own money, so that's a big advantage for the investors. But the next few months will be very interesting because of all the development risks in the market. Nobody had these increases in their calculations.
Okay, good. I wanted to pick up a little bit on particularly, I mean, you know, purpose-built student accommodation has a lot of similarities in some ways with micro-living and also co-living. But I wanted to pick up on the micro and co-living. Co-living, you know, thinking back a year, 18 months ago in the height of the crisis, everybody thought, the health crisis, everybody thought that was the end of it for co-living. You know, nobody's ever going to look at that ever again. But now we're having discussions in the market on the senior living side around whether or not, actually, because there's so many single seniors, that actually a form of co-living might work quite well, or indeed, you know, similar to student accommodation in some ways. So I suppose, how are we seeing trends in those? Where do we see where do we see the market moving, or the future for the micro-living and co-living sectors? Anybody want to pick that up?
I think it's quite obvious. If you look at the evolution of household sizes in most of the European cities, households are shrinking. So singles and dinkies are becoming the predominant form of households. In Germany, and I think that's not very different in other countries, you have city areas with 70-80% single households. So Frankfurt as a whole, as a city, has I think 76% of the households without kids. And in an environment where we see now the cost of living, we always tend to say it's the rent, but it's not only the rent, it's also utilities. So the cost of accommodation are rising double-digit year on year on year on year. It is a very vital trend looking for smaller units. So the good old days of renting 100 square meters as 5, 6, 7 euros a square meter, they're definitely gone. And that puts a lot of pressure on the demand side on smaller units. If you look at the rental stock in Germany, you have 10% approximately on offer below 40 square meter, but north of 60% single households. There is a massive mismatch, which is even higher than on the pure student side. Yeah? And this definitely will lead to a situation that there is a very, very strong focus. The other thing is a lot of young students finishing university, coming from PBSA schemes, having enjoyed being in a peer group, having enjoyed the community on these schemes, are looking for something similar. They're not looking for a multi-family flat somewhere in a resi area where they don't know anybody. Yeah, they want to maintain their lifestyle even in their first job, or let's say in the first years of their career, which not only from a quantitative perspective, but also from a qualitative perspective of how products need to be designed going forward, will bring pressure on the rental sectors in most of the European countries. And now that the COVID restrictions in Germany have come to an end earlier this year in April, we have seen in our products massive inflow from young people who had been locked up in home offices whilst having joined companies for their first job and never seen their desks in their offices, and now going to these cities. We operate a scheme in Hamburg that is focused just on that type of young people, and we had a sharp pickup in occupancy from some 20% occupancy at the end of the COVID lockdown regimes now to north of 90%. And this is something where I think most of the European cities will see a very, very strong trend, people demanding such accommodation solutions.
Great. Does anybody else want to pick that up? Yeah.
Yeah, that's very true. I was also thinking about the period that they will rent for. It's going to be longer and longer because it's getting more expensive to buy property. The loan to equity ratio is so high. So for individuals, it will be even more expensive. So they will rent for longer. They now have this home office where they are stuck in the unit. So a topic of targeting the right customer with the right product for providing bigger unit for those who work from home, for those who have their kid in their unit, also longer renting, will be all thing for us to consider.
Okay, great. We're quite up against our time here. So does anybody have a question though? We've got one question here. Any others? And I'll try to do that as efficiently as I can. One question here. Let me grab.
Thanks. Ondřej, Spaceflow. So I'd like to ask if possible, kind of moving away from the macro level interest rates, capital flows to more the micro level of the students and let's say customer experience. It might be super interesting to kind of hear you guys compare notes in terms of how do you approach things like digitization and customer experience. We see that's a big topic for all of the big operators, and be interesting to hear what are, let's say, the big topics for you in this area.
Great. I've got one question as well that's come in from online. Thank you very much for that, which is, will the non-Russell, this is the UK one, interestingly, will the non-Russell group types universities fare less favourably across the EU, creating non-equitable brain drain possible situation where less, I should have read this first, obviously, less following international capital, especially for cities less than 500,000 in population. So I suppose that's a little bit about the locations and what we're seeing in terms of people being popular. Does anybody want to pick up on either those, the question there or the question about location?
I think we have seen on the BONARD map there is a massive geographic spread of interesting student cities. If you look, for example, in Germany again, we have more than 100 spots and cities hosting universities. You have around 40-50 cities with universities north of 20,000 students. So there's unlimited room. And whether you go to CEE or whether you go to Spain, you find similarity in all these markets as coverage rates are on average pretty low. Yeah, for sure. You look into factors like what is the local resi market shaped, what is rental levels, how has the university evolved, what's the structure of the students, how many internationals are attracted by this university, and so on and so forth. But in this match, I think you can find a lot of attractive spots all over Europe where people like us or other developers will have a strong focus on going forward.
Okay, good. Does anybody want to else pick up anything out of that? No, that's good. Okay, great. One last question to everybody, because we definitely say trends and opportunities. So where are the opportunities? Because we're going to take a positive end to this. So positive opportunities, where are they? Let's start with you, Sofie, at that end.
I think it's back to where I started out before, that we need to refine our product to the situation in the market now. We need to create a more sustainable product and more affordable one. I think the opportunity is definitely there if you can crack that nut and bring a new product to the market now, rather than only raising rent indefinitely. So that would be my suggestion.
Okay, great. Julia.
The fundamentals of the sector are really strong across the market. So it's with the right product, for sure. The right product will find its right opportunity across Europe.
Also very optimistic. For us, we're focusing on partnerships. So it's very turbulent times. So we try to find or more develop our partnerships with the operators at the asset level. That's for us the most important part.
Rainer.
I can only repeat myself. Fundamentals are very strong for the sector, and I think there are a lot of opportunities that lie ahead of us. The question on timing is just how quick the various stakeholders will be able to readjust a framework in which we can operate, and that means governments on electricity price caps or not, and energy-related subsidies on construction or not, and all these factors who are currently all wobbly and variable that make it impossible to move ahead for developers, for construction companies. And the sooner we get here a clearer framework, interest rates are as they are, we can start new activities in developments in Europe.
Okay, good. And let's just see, so quite positive on the panel actually. So let's see positive in the audience. So there's going to be three options here. I'm feeling positive, I'm feeling neutral, or I'm feeling negative about the market. So positive, hands up. Show of hands for positive. Okay, show of hands for neutral. One over there, two over there. Negative. What a lovely group of people you are. How fantastic. Okay, very good. So not only are you positive, but you're positive as well. Great. Thanks very much, everybody.